This is Sid Haas with LKCS. I'm the Vice President of Business Development here, and I'm heavily involved with our e-statement development and all of our statement services, along with many other areas of the company. But today we're going to be discussing kind of the next step in e-statements. We've seen, some of our customers exceed 70 and 80% e-statement penetration. So they're almost, getting to the point where they're maxing out really the number of people that are enrolled for e-statements. There's still some room, we expect that they'll, continue to grow, but that rate's going to slow down for some of our customers. A lot of our customers obviously have to catch up to that. But what's the next step? How can they make sure, that they're really getting the most benefit from their e-statements? What marketing opportunities exist with e-statements? And, we're going to be discussing that and showing, some solutions that you may not have already thought of. With that, I just want to share a little bit of information about the company. LKCS has been working with financial institutions since 1961, and all of our products and services are really designed around your needs, those needs. We provide a wide variety of marketing services across all media, everything from traditional print and direct mail to a wide variety of electronic services. And when it comes to statements and e-statements, we currently process statements for over 200 institutions each month now. But we view all of those opportunities, print and direct mail and web development and social media and statements and all those different marketing media that we help our customers with, that's how we see them. So we see statements and e-statements as just another opportunity for you to market to your account holders. So today's presentation is going to be focusing on specifically e-statement marketing. We know that e-statements obviously save, all of our customers money, and it's a significant amount of money, every month. But how, is there a cost to that, right? You're traditionally incorporating marketing with your printed statements, but not all financial institutions are including them with their e-statements. And in fact, e-statements provide some additional opportunities for marketing that can actually be used then to generate income, from those e-statements. So we're going to be talking about some of those opportunities today. So I call this Act 1, and when I say get your house in order, what I'm saying actually is to take a real close look at your e-statement solution itself, because what's critical when it comes to electronic statements, and engaging your account holders is really delivering a premium experience. Getting a paper envelope and opening up a statement, people know what to expect. They know what's going to happen. But they don't necessarily know what's going to happen, especially when they first enroll for e-statements and first start getting an e-statement. But more importantly, I think you need to really deliver a better e-statement than your paper statements. And I've seen a lot of solutions that I wouldn't say that the e-statement is better than paper. I think it's very easy for vendors to do that. They just have to be pushed in a lot of cases by their clients. So I think it's important for you to take a look at your e-statements and make sure that your e-statement solution, that your e-statement presentment and all of that is actually a better experience than paper. E-statements need to provide a benefit to your account holders and not just that cost-saving benefit, back to the institution itself. A couple of ways that you could consider doing that. I've taken some screenshots here. I don't even know what platform the top one is, for e-statements, but I know it's not branded, right? It has nothing to do with that financial institution or that particular, individual in any way. And you can compare that to one of the screenshots that I took from one of our customers here, just to show you, obviously just branding and color and logos and things by itself make us, obviously make an impression right from the start. So, I think that's an easy way for, for some institutions to first make an impact with their e-statements. Second thing, if you haven't already done that, or if your e-statement platform, it doesn't have the capability potentially today, you really need to consider reformatting your statement. I'm showing you one customer's statement. On the left is how it looks when it comes to us straight from the core processor, and in a lot of cases, that's what it looks like, in e-statements that are integrated with core processing systems or integrated, with online banking. The reformatted statement on the right is now being delivered for this customer right inside of their core online banking platform as well. We're returning it back to that vendor. And obviously you can see a dramatic difference, not only in the look of the statement, but obviously, again, the brand elements, and then you're beginning to see some of the marketing opportunities that we're going to be talking about. But, when your customers and members are signing up for e-statements, would they rather see a statement like the one on the left or the one on the right? And I think that's something that you need to look at if you haven't already made the move to a reformatted both paper and an e-statement. Retention of e-statements is important. You want to be that filing cabinet, right? So, we see a lot of cases where, where financial institutions have, 1, 3, 6 months of retention. We feel, and it has been this way for us for quite a while, that 12 months of retention should be the minimum. But we see more and more, customers and prospective customers coming to us and very frequently asking us for 18 or 24 months of retention, of their e-statements. And we have some people that are beginning to ask, and have already implemented actually unlimited retention. So again, one of the benefits that you can provide, to your account holders right off the bat is knowing that they don't have to go to their filing cabinets to find their prior statements, that you're always going to have them available for them. And it's also important to note that, instant presentation, when you do have an account holder that first enrolls for e-statements, are all of their historical statements already available for them, or are they just going to start getting e-statements from day one? And again, I can make the case that there's obviously a tremendous benefit if those prior statements are available to them right off the bat. So just, a few things there to be aware of. One other thing you might want to look at when you're, cleaning house and taking a look at your current e-statements, are there other documents in addition to those monthly and quarterly statements that you can provide electronically? Things like your daily notices, your credit card statements, if you have separate mortgage statements, and all those end-of-year tax forms that are coming up again. All of those types of documents can be delivered electronically, both saving you money from printing and mailing them out, and also giving, your account holders one place where they can get all of that information and all of those documents, that they need. So there's benefits to both of you. And finally, we see it with website development and everything else, but mobile devices are taking over the web, right? I mean, this is probably an old number now, but we're seeing anywhere from 30 to 40%, when we look at the web statistics for our customers' websites, 30 to 40% of your traffic at a minimum is coming in on mobile devices, phones and tablets. You want to make sure that your e-statements are truly mobile friendly. People are not buying desktop and laptop computers right now. Those numbers are declining. I mean, you see the sales numbers for Dell and HP and all of those companies. It's not a pretty picture for them on the desktop computer side of things. So, you need to make sure, again, that your e-statements are compatible with all of those mobile devices. In addition to the mobile device, email is becoming less and less, I wouldn't say less and less popular, but it certainly doesn't have the instant notification that a text message does anymore. We're checking our emails less frequently, especially when we're out of the office. But when a text message comes in, we're looking at that phone typically within 10 or 15 seconds at most, if not less than that. So, you may want to consider enabling text message notifications for your statements, and especially if you start to deliver daily notices, things like negative balance notices or, transfer notices, those types of things. You may want to look at enabling text messaging in addition to your statements so that customers and members can specify if they want to receive an email or a text message based on the type of document they're receiving. So that maybe for their monthly or quarterly statement, an email is just fine. But if they get that, delinquency notice or that negative balance notice, anything like that, an insufficient funds type notice, that they get a text message. So enough about your e-statement solution itself, but I think that's an important factor, is first to make sure you're delivering a premium e-statement experience. But after that, let's start jumping into the meat of the presentation and really talk about ways that you can market and and promote your products and services with your e-statements. So we're going to go through just some options for you to consider implementing, and this can be done with numerous vendors, not just LKCS. So, you know, and again, just because you're saving money with e-statements doesn't mean you should sacrifice those marketing opportunities. I mean, it's great. You know, we have customers again that are saving, you know, some of them probably well over $10,000 a month by having e-statements because they've got such high penetration. But they still want to make sure that their best account holders, those are the people that are using all of their electronic services and using the institution as their primary, you know, financial institution. They want to make sure that they know about their latest products and specials. And they're doing that by marketing across all media, including statements and e-statements. So one of the things for you to consider with your e-statement is to incorporate banner ads into the e-statement display. The benefit of these banner ads is that they can link to web pages, they can link to PDFs, they can link to online calculators, they can link to online applications, you know, they can link to your website, partner websites, wherever you need them to go. And in a lot of situations, these banner ads can be selectively displayed based on what we know about each account holder. So you can display some to everybody, and you can display some to different people. And we're going to be talking about that, you know, further, but different ways to target and segregate, you know, different groups of account holders. But banner ads, you know, you're using them on your website in most likelihood, so you should consider using them as part of your e-statement as well. It's a great way, by the way, to link to newsletters and statement inserts and all those things that you're incorporating in your paper statements. It's a great way to link to them, you know, and deliver that same content and those same offers and that same information with your e-statements without obviously physically stuffing that stuff into an envelope. A new feature that we've implemented here at LKCS is the ability to actually flag these banner ads as new to indicate to, you know, your account holders which of these offers they may not have seen yet. You know, and it obviously calls attention to those. I mean, I probably have too many news in this example. I just took a quick screenshot from a demo site. But as soon as, you know, an account holder clicks on one of these to go to that landing page and see the information about that offer, then that new flag disappears. So, you know, obviously from month to month, it's a great way, you know, for you to get the word out. Hey, this is something new. You know, this is something that you should take a look at. On the e-statement itself, just like, you know, many of you are doing, and you know, we certainly have the ability to do on your paper statements, but you have the ability to incorporate ads, or what we call inserts, directly on the e-statement itself. So as part of the statement, as your account holders are reviewing their transactions and balances and all of that information, they're able to see, you know, marketing ads, graphical ads in full color right as part of that e-statement. And you can see how that jumps off the page. We'll talk about this further, but these can be any size. They can be in just about any position. You know, it just depends on your statement layout and the capabilities of your statement vendor. And keep in mind, when it comes to e-statements, you know, we still see the vast majority of statements being printed in black and white. And that's because black and white printing will always cost less than color printing. We see, you know, competitors of ours that are offering color statements for the same price as black and white, so they can lock, you know, customers in for a long-term contract. It's a good idea now, because right now color is more expensive than black and white, but those prices are going to continue to decline. So if you're locking in a price now and you're locking it in for 5 to 7 years, in 5 to 7 years you're going to be paying much more for that color statement, or for that black and white statement for that matter, than what it's going to cost in 5 to 7 years. Even in 5 to 7 years or 10 years or however long you look down the road, I am 100% confident that a black only statement is going to cost less than a color statement to print. But on the e-statement side of things, there's obviously no additional cost to display color. And you can see the difference in impact, you know, that these two statements make. It's the same statement, it's the same information, but obviously you can see, you know, what the difference, you know, that color makes in seeing the offer and seeing, you know, how the different sections of the statement are segregated and things like that. Another thing for you to consider when it comes to e-statements is to customize that e-statement email notification. Just about every vendor that I'm aware of, including us, sends out an email, to account holders when their latest statement is available, or when their latest notice is available, for that matter, any type of document. We give our customers the ability to customize that message. So rather than just saying, hey, your latest statement is available, click here to go to our website and log in, we know that not every account holder is going to need to open that statement, right? With online banking and mobile banking and all of those tools, they may not need to look at that statement, but we still want to deliver some information about what's happening at the institution. So these are very simple emails. There's not a lot of graphics. It's all text. Obviously, these can include graphics and, all of those types of things to pretty them up even more. But I think you can see how you can deliver the information about the latest specials and the latest promotions in a quick little email that also tells your account holder that they have their, that their latest statement is ready for them to view. It's quick, it's easy, it's inexpensive, and it's impactful. And just like any other email marketing message, you have the ability to review, the number of reads and the number of clicks and all of those analytics, that you can use for all sorts of other marketing purposes as well. The landing page itself. So whatever page, your account holder goes to when they link to look at, at their e-statements, it probably presents them with some type of list of available documents. But why not market to them right on that page? You can see here an ad for an auto loan, right? And we're linking right to an application. We're linking to questions. We're giving people the ability to share this offer, print it, whatever it is, all as part of the page itself. It's just, basically like a part of your website, but it's it's an area where you can market whatever you want, to your account holders even before they get into the e-statement. So customize that landing page. There's lots of different opportunities. We have customers that, will put links to mobile banking, and application, or different apps, in the different app stores on these pages, and obviously, whatever their latest special promotion, community event, whatever it is. I mean, that could even be just a calendar of events if you want it to be. And you can even add video. We have more and more of our customers asking about incorporating video, right? You're spending money on getting videos developed. You're putting them up on your website. You're putting them up on YouTube. But why not also put them in, to your e-statements? So this is a way that you can incorporate them again right within that landing page for e-statements. And it's a great way when it comes to, obviously, financial education, mitigating risk, all the different fraud, preventing fraud, all of those types of things. A great way to do that is to potentially put a video in as part of your e-statements. And a new idea that you may not have considered is what we call a popover. When that account holder comes in to view their statements, it's a very common technique. You see it on a lot of websites, especially news and sports websites. There's something that pops up. In this case, it's just an email subscription form. This could just as easily be a regulatory notice or, some kind of special offer, or any type of ad that you can think of can be presented in this type of popover. I wouldn't use this every month. It's obviously an intrusive type of technique. But for important notifications, again, some compliance notifications or those risk alerts, fraud alerts, anything like that, that you feel is important can certainly be presented as what we call a popover. Account holders click that little close button, that goes away, and all of their, regular information on that landing page is behind it for them. All right, so those are the different ways that you can market on your e-statements. Now we're going to give you some ideas about how you can actually use those, right? So we have these, this ability to put banner ads on the e-statements. We have this ability to put inserts onto the e-statements. We can customize those emails. That's great, but what are, which combination of these are we going to use, and what are we actually, how are we going to promote our different products and services with those tools? So that's what this section of the presentation is really focusing on, is just to give you some ideas and some takeaways, from the webinar. So if you've gotten our newsletter, we've kind of given some indication what we're going to talk about, but obviously, takeaway number one here is how are you going to inform your account holders of your latest specials, even before they click to view that e-statement? And from what you've learned so far, hopefully you've determined that that's going to be that custom email notification. It doesn't matter from that email if they actually click to view that statement, if they get to that landing page, if they get to the statement itself. We're going to provide some information to them right off the bat about the latest specials, promotions, offers, news, whatever is important to your institution, right as part of that email that notifies them that their latest statement is available. Takeaway number two, how are you going to drive your account holders to your website, to online applications, to custom landing pages you've built? How are you going to get them to take that next step, by actually taking action? And this is one of the key differences, by the way, between a paper statement or any type of print-based, or direct mail-based marketing campaign and an electronic campaign, because we actually have that ability now to drive people to take action, and they can take action electronically, right? They can fill out an online form, they can visit a web page, they can request information, they can chat, whatever it is. And we're going to do that via a combination of banner ads and that e-statement landing page, and even potentially, obviously, that custom email notification is going to include links as well. But, we're going to identify people that, we feel are a good fit for a specific offer. We're going to present that banner ad to them. They're going to be able to click on that banner ad and go right to whatever website or document or application or calculator, that you want them to get to. And that e-statement landing page, again, before they even get to that e-statement itself, can also be used to present these offers and link back, to your website. Takeaway number three, and this is something that more of our customers are beginning to do, but actually modify your statements by account type is something that you can do, and it makes a big difference. And some examples for you. The way that we're going to do that, by the way, is through onserts. We're going to deliver different onserts potentially to different types of account holders, and we're going to reformat those statements and have, even offer different statement layouts to different account types. Some ideas here are business accounts. Businesses have different statement needs than consumer accounts. So some things that we've seen from our customers is we'll actually change the format of that statement itself, separating debits and credits into different sections, for the credit unions out there, that don't necessarily include check images with their paper statements. You may want to include check images with your business account statements. And with these statements, you can include check images for everybody, even if you're not incorporating them into your paper statements, because again, it really, we're not talking a cost based on the number of pages like you are with paper. So you can incorporate those check images. Maybe accounts with loans, you print loan payment coupons, and I can show you examples of those. Think of the convenience, of your account holders that have like a HELOC type loan, where that loan payment can change based on, any number of factors, but mainly what part of that line of credit they've actually accessed and used. We can print that loan payment coupon right on that statement and display it right on that e-statement. Kids accounts, right? You can use different fonts, different colors, different graphics, all of those types of things on those different account statements. And again, those onserts can be targeted based on the different types of accounts, or the statement layout itself can be changed based on different account types. Takeaway number four is obviously, we continue, every financial institution has a need to educate their account holders about personal finance issues, again, those fraud, how to protect themselves from fraud and all of those types of things. And there's numerous opportunities within the e-statement to do that. Obviously, you have that email notification that goes out, that e-statement landing page, the videos that I showed you potentially on that page or on other pages of the e-statements. Those banner ads can link to educational material. The onserts that you display on your statements, and those can be any size. So those can be all the way up to a full page if you need it to be. And those popovers, any combination of those can be used to provide educational information, to your account holders. And again, they can be, targeted and customized based on what we know, about each person. The meat of the bones here is takeaway number 5, right? Effectively cross-sell new products and services. How are we going to cross-sell to each account holder as part of our e-statements? And we're going to talk about this quite a bit, but primarily you're going to use banner ads and you're going to use those inserts to do that. Okay, both of those are very, very easy to use to target, as I've talked about, and we'll give you lots of examples here, different groups of account holders, because we can literally set, what we know about the account relationships or balances of an individual account holder. We can use that to trigger different ads or different inserts, different offers overall for different products and services based on what we know about each person. We're going to target based on account relationships, what accounts they have, what accounts they don't have, what balances they carry in certain accounts or certain categories of accounts. So do they have high savings balances but no loan balances? Is the reverse true? What types of activity do we see? And this can be down to, literally looking at, for merchant names or competitor names, right? If we're seeing mortgage payments made to Bank of America, we might want to look at a different, some kind of marketing offer to get that mortgage, back in with you. We can look at geography. We can look at demographics. We can look at credit data, and we're going to talk about that quite a bit in an upcoming slide. But basically, we can look at any conditions, any data that we can find in the statement itself can be used to trigger different banner ads and different inserts on the e-statements, and any conditions in a separate file. So, that data may not exist in the statement itself, but we may either purchase demographic data or get a list, from something else, or maybe you pull data out of an MCIF system or from some other third-party vendor system, whether it's like a mortgage company or an investment company that you're affiliated with. Any of that information that we can tie back to that account number can be used to trigger, again, these different offers as part of your e-statements. Some ideas here for you to consider, specific ones, and I can give you tons of these, is CD renewals, right? We know when an account holder is going to have a CD coming due. We know if that rate is likely to be higher or lower than their current rate on a CD. And based on that, we can trigger information to them about that renewal process. We can thank people for paying off a loan. We know, which customers have 60-month auto loans, let's say, and they've had that loan for 36 months. Maybe we start that conversation about, if you're thinking about trading that vehicle in, come back to us. We're ready to help you. Start that auto loan recapture type process. We know those account holders that have home equity lines of credit with available, balances. So they have available credit that they can tap into. Maybe we include a coupon, or some kind of offer right on the e-statement for them to request in advance on that HELOC account. We can promote direct deposit for, members with checking accounts that don't have direct deposit transactions on their statement. We can promote money market accounts or CDs for those high balance checking accounts. We see more and more of our customers right now looking for deposits as opposed to loans. Again, the e-statement cost, at least ours, is not based on the number of pages in a statement. So for those customers that don't have a checking account with you, why not include the checking account switchkit forms right as part of that e-statement? Or again, that banner ad linking to that electronic switchkit or to PDFs of all of those switchkit forms. Many of our customers have investment services, right? But they're not necessarily promoting those investment services to people with high balances in their savings accounts. Or again, we can look at demographic data, income data, lifestyle data. There's even, demographic fields that I can go out and purchase for any of you that indicate to me, if somebody's a likely investor. Well, if we have a likely investor, even if they don't have high income or, high balances at your institution, they still may be a good target for a banner ad or for an insert promoting your investment services. Available equity type information is available from every county assessor office nationwide. So I can look at that to determine if somebody's a good candidate possibly for a home equity ad. I can do simple things, right? I can trigger little birthday messages. Just, make a member smile, by wishing them a happy birthday if they're getting a statement in the month on their birthday, little things like that. And obviously pre-screen loan campaigns, and we're going to show that here coming up. But just a few ideas, and again, I can, have a conversation with you and probably give you dozens more of these, but little things that we can look for within that statement data, or within demographic data that's available for each and every one of your account holders that we can use to target market back to them as part of their e-statement. Lots and lots of other opportunities. Takeaway number 6, we have, you're hopefully obviously getting new account holders each and every month, new members and new customers. So how can you use their e-statements to start onboarding them? How can you, again, continue to cross-sell or really even begin the cross-sell process with these newest account holders? And the answer for that is using onserts, but using what we call a matrix-based onsert, which is part of an overall onboarding campaign. So instead of just triggering one onsert, we can actually trigger multiple onserts over multiple months of e-statements to promote a variety of different products and services that fit the age and lifestyle of the new account holder, and obviously promoting accounts that they don't already have. So these, a matrix-based onsert is a series of statement onserts sent out over a period of months or quarters to cross-sell additional products. It's the same concept as matrix mailings for any of you that are doing some type of matrix mailing campaign. And it's a terrific solution not just for your newest, members or customers, but also for any mergers or acquisitions, new branch locations, different things like that. And we actually have the ability to run multiple matrices at a time, so we can have a new member or a new customer onboarding campaign in place, and also have one, for people that open an account at a new branch or whatever that is. But instead of just triggering one onsert, obviously we can trigger multiple offers over a period of time and track, who's eligible for each one. Here's an example of what one of our customers was doing. These are the different onsert ads that are printed right as part of their statements and e-statements that are used to onboard new members in this case. There was a variety of them, and what I like about them is each of those black bars, each of those reversed out bars was a special offer, and it made it very easy to measure the response that they were getting from these things. There's very, very little additional cost to incorporate this type of onboarding campaign with your e-statements. Takeaway number 7, how do you turn unprofitable accounts into profitable ones? It's a constant struggle. We always have those people with one account or two accounts. They might be using us just for a check cashing service, whatever it might be. How do we make those accounts profitable for us? And again, we can use one of these specially designed matrix, and these matrix-based onserts, but instead of an onboarding campaign for new account holders, we would execute what we call a reboarding campaign. So these are existing account holders that just aren't using your institution as their primary financial institution, so we're going to reboard them and cross-sell to them. It's that same concept as onboarding, but designed to attract additional relationships from those existing account holders. And again, we're going to trigger a series of onserts over a period of multiple statements, all aimed at establishing additional relationships with those account holders. Takeaway number 8, how can we use our e-statements to refinance loans that your account holders have at other financial institutions? We're going to do that with onserts, but in particular, we're probably going to do it with larger onserts. So instead of just having an onsert that's, a quarter of a page or a sixth of a page, something like that, we may use a full page onsert that we call an e-statement cover letter. So I mentioned that those onserts can be any size. They can go all the way up to a full page. So we can literally take the first page of your e-statement and make it a personalized cover letter, promoting, some kind of loan offer. And we do that with pre-screen offers that are based on credit data. So we actually purchase the data from any or all of the 3 major credit bureaus, and we set specific criteria, obviously working with you and your lending team, to identify those account holders that would qualify for a loan offer based on your specific, requirements, your underwriting criteria. These types of pre-screen loan campaigns, are available for any type of loan. So whether it's an auto loan, a mortgage loan, a HELOC, or, refinancing existing loan as we're talking about, or credit cards, all of this info, any of these loan products and even specific products within there, we can identify specific conditions and specific criteria for your account holders, let you know which account holders meet those criteria, and then include those offers right with their statements and e-statements. So here's some ideas for you. For auto loan campaigns, we can start just promoting new auto loans. Let's look for those account holders that don't have an auto loan with you currently. Maybe they don't have more than one auto loan anywhere else, total. Maybe they haven't taken out a new auto loan in the past 2 years. Maybe it's 3 years, and we can obviously adjust all of these criteria. And obviously they meet your minimum FICO score. They don't have any, derogatories in their credit report, and we can extend, a loan offer to them. We can get much more specific. So if we're looking at refinancing an auto loan, we can look at again, for account holders that meet your credit criteria, that don't have any, late payments or repossessions or anything like that in their credit history. Maybe they've got at least 2 to 3 years left on their loan. And because we know what the balance is on their current loan and, potentially the rate on their current loan, and we know what rate and term they would qualify for at your institution, we can actually show them specifically how much they could save on a monthly payment. So maybe we're only going to send this offer to people that we can save at least $25 or $30 a month on their car payment. And we can even look at lease expiration. So let's find that group of account holders that has a lease coming due in, say, 1 to 6 months. We know these people are going to be doing something for a vehicle. They're either going to purchase the vehicle that they're currently leasing, they're going to lease another vehicle, or they're going to purchase a new vehicle. Let's get to them before they make that decision, let them know that they're already pre-screened, or pre-approved or pre-qualified. There's any number of terms we can use for an auto loan at your institution, and maybe tell them why a lease isn't the best financial decision that they could make. We can do the same thing on the mortgage side. So for mortgage refi, it's just like I can look at an auto loan and tell you how much I could save you, each month by refinancing that auto loan. I can do the same thing on the mortgage side. So I can look for those people that haven't refinanced in the last, 18 months or 2 years. Look at what the rate and term and all of that is on their current mortgage, and calculate the payment based on what they would qualify for at your institution. And if we can save them over $100 a month, let's get them that mortgage offer in their hands. First-time home buyers, I can identify those account holders that are renting, and I can qualify them, obviously based on their credit score and any other credit parameters, and send them an offer, for a first-time home buyer's mortgage, and explain why renting, isn't the best, solution for them long-term, and why now is a great time to buy. And any type of specialty mortgage program that you offer, right? I mean, I can look at very, very specific conditions in this credit data. Find people that are eligible for FHA or VA loans. Find people that have jumbo loans out there. In the case of, some of the HARP campaigns over the last couple of years, we were looking quite frequently for people that had Fannie or Freddie loans. But I can look for people with construction loans or balloon loans or any type of situation that may indicate, they have to do something. These are people that are going to be doing something for a mortgage coming up. How can we help them? Home equity, there's all sorts of opportunities here as well. So I can look at debt consolidation type campaigns. So now I can look at homeowners. I can look for homeowners that have equity, let's say over $50,000 in their house. But I can also look specifically for people that are carrying at least, say, $10,000 in credit card debt. And if you have that combination, if you've got $50,000 in equity and $10,000 in credit card debt, and you meet my credit score parameters, and you don't have any, late payments or foreclosures or, bankruptcies or anything like that in your history, I want to extend a debt consolidation offer to you. HELOCs, again, I can look at those same homeowners that have $50,000 in equity, but maybe they're not carrying that debt, that credit card debt, but they don't have an open home equity trade anywhere else. So maybe I can tell them about my home equity and extend an offer to them about that. Maybe I've got people that have a very low mortgage balance and a very low LTV. So maybe a traditional first mortgage refinance is not the best opportunity for them, because they're not going to be able to recover those closing costs. But now I can extend a home equity loan offer, to them as a home equity loan in the first position to pay off that house and refinance it at a much lower rate. And even on credit cards, I can look at, a balance transfer type campaign, so I can look for account holders of yours that have existing credit card debt, in this example, over $5,000. Again, they don't have any lates or bankruptcies or collections, and we can extend a balance transfer offer to get that balance off of a high rate card, and onto a credit card with your institution. So just a few pre-screen type campaigns for you to consider that we can incorporate directly into your e-statements. And this is what these can look like. This is literally the first page, of these statements. The one on the left is an auto refinance campaign, and you can actually see how I'm able to calculate, a potential monthly savings, for this individual. And the one on the right is a home equity loan offer. But, these can look like lots of different things, but this is exactly what they can look like, as the first page of your e-statement. These can obviously be included with your paper statements as well. They can be sent out as separate direct mail pieces and not have anything to do with your statements. So, all of those ideas can be used in a variety of ways, but clearly the least expensive way to extend these offers is going to be via e-statements, and or email, because we can extend these offers via email marketing as well. And that's all I have for you today. So I want to thank you very much for your time. I will stay on the line and answer any questions that come in, but please feel free to call or email me with questions directly as well. Thank you for joining us today.